should be live. At least I hope so. Let me see if everything is working. Yes, I think it should be working. Welcome to today's live, either on YouTube here or on Twitter. I hope you can hear us well and obviously see us well here on YouTube. Let me know. And then we're going to go. Happy Tuesday. Hope you're doing well. And we have a couple of interesting topics to discuss. Obviously, we've seen a bit of a sideways trend in the markets right now. Is this the bottom? I think a lot of people are asking this. We have seen Chapter 11 filing from BlockFi. We see a little bit of a minor capitulation, which generally has been relatively bullish in the short term, especially. And so, yeah, and then let's see where this entire rabbit hole takes us. Great. With that, handing it over. Fabio, how you doing? Happy Tuesday.
Happy Tuesday, everybody, and welcome to today's episode. I'm doing great, actually. I can't help it. I tweeted it yesterday, but I can't help it. I'm kind of bullish right now. The prices right now, they're for me, they're great prices to buy, and there's so many bearish things out there. You mentioned it briefly. One of the things is BlockFi's Chapter 11 filing, and the price didn't seem to care. The price didn't move at all, which I find kind of interesting. And there's always a chance that we are seeing bad news out there, but for me, it's kind of an indicator that the price doesn't move, and still that I'm so bullish because so many other people are bearish. And I don't know. I can't help it. I really see us bottoming in the next maybe 1-2 months, maybe December or the beginning of January, and hopefully better times next year. But I know you have. We briefly had a back and forth before entering the call, really just 30 seconds, and I asked Julian what he thinks about did we bottom, did we not? And Julian has some interesting points. Maybe you can hit us off with them.
Yeah, I mean, again, I always believe that no chart in this world, because every chart is just the past, right? Any blockchain analytics is just the past. So it's everything until right now. But at the end, what's going to happen is what people are doing, what companies are doing. And so price gets created from people selling versus people buying. And if there's more buying demand than there's selling demand, then prices go up. And if there's more selling demand than buying demand, prices will go down. So I would just ask what at the moment would make more buying demand and what makes more selling demand. I think it's a bit harder to kind of look at the buying demand. At least for me, it's a bit harder to kind of see where a lot of buying demand is coming from, let's say, over the next 3 months. I think people on the outside are definitely going to keep dollar cost averaging if they are in this space. So if they have been bullish in this space over the last months, I don't see much reason on why they would change their tune right now. So I do agree they're going to stay bullish. But I think on a lot of institutions, a lot of the kind of larger investors that maybe have been watching this space, I think they're going to stay on the sidelines right now. I personally don't see the reason on why they should be going in. I think a lot of people right now who are, who are just kind of, there's Christmas ahead. A lot of people probably uncertain about their job roles. Maybe they're getting fired, they're not getting fired, especially there's high value roles in a lot of companies. It's just a lot of talk. So I just do see that a lot of people want to stay liquid. They don't want to tie up their dollars or euros or Swiss francs or whatever into something that's volatile in comparison to what their entire lifestyle is priced in. And so I don't see the buying demand going up. I don't see the buying demand going down much. I just see this staying very constant, actually. I don't believe that actually this is going to go lower right now. I don't think this is going much higher. So to me, it's all coming down at the moment from the price is, are people going to sell less right now or are they going to sell more? And so that's really the question that I would be asking myself. And so where would this selling be coming from? And I mean, sure, miners, they're going to be forced to sell a certain amount, especially if prices stay low. We're seeing this a little bit right now. There's some capitulation. well, if there's another bankruptcy or there's another insolvency, I think we could see some selling pressure there. And then I think a lot of it is coming from people who really need to sell their crypto in order to pay for their daily life. And that could be because their main source of income, I don't know, goes away, goes down. Maybe they're having issues with where they live. And that's probably the main things that I'm just looking for. I see two main utilities, let's say in Bitcoin. In Ethereum, it's a bit wider. And Ethereum, obviously, a lot of it has to do with DeFi and Web3. And I think all the other chains kind of tie in there. But in Bitcoin, I see two main reasons, two main utilities. I see that of having a general kind of exposure to the crypto space. So it's like you bet on crypto as a whole, as whatever this ecosystem means. And Bitcoin is just a really, really, really low risk index for that. Or you're using it as a pure hedge for the centralized financial system to really collapse. And I'm just not 100% sure that someone that needs to get food on their table, needs to provide for their family, needs to pay for their car, needs to pay for their rent, is going to say, look, let me rather bet on the crypto ecosystem, or let me keep my bet up that the CeFi system is all going to collapse. And instead, I'm not going to eat, or I'm not going to provide for my family, or I'm going to switch the heater off. I just don't see that this is a likely scenario. And so that's just where, especially if these prices are low, if traditional markets are going to go lower, especially if economies are not doing well, or the economy is not doing well, or economies are not doing well, and companies are not doing well, that is the main pressure that I see. I think we're going to see the last time the Fed having any importance in all of this is probably in December afterwards, unless they go for an aggressive quantitative easing. I actually think the Fed is going to become irrelevant next year, and or as irrelevant as they were in the earlier years, not maybe over the last 3 years. Yeah, that's just where so if you're asking me, is the bottom in? I really think it depends on, are companies going to fire even more? Is there another crypto insolvency? And how is the housing market doing in the US? COVID, I don't think there's much relevance. China, I mean, we see a lot of unrest there at the moment. Not sure how relevant that's going to be. Ukraine conflict, I actually see this settling down over the next 3 months. I mentioned this a couple of times. So I don't see a Taiwan conflict, no incentives for the parties. So yeah, I think that's what it's going to come down to. Fabio?
Yeah, because we don't really have so much juicy things to talk about this week. Let me jump in with some conspiracy stuff. Or actually, it's not that conspiracy heavy, but okay. So you said that Bitcoin is mainly a hedge against the collapsing financial system, and I would partially agree on that. But I cannot foresee a total collapse. Like of course, I can foresee a recession. I could foresee a depression. I could foresee some heavy times in the financial markets, but a complete collapse is off the table, because we have two possibilities. Either we let it slide and everything burns down, so the Austrian approach, but this is not what we were doing, and this is not what we are going to do. We're going to save everything. We're going to print a bunch of money, and we're going to bail out, or we're going to drop some airdrops, or some UBI, or some stimulus, or whatever. This is 9 out of 10 times, if a country has the possibility to either let it slide and burn down the bush, or to print money, they're going to print money. And I think this time is not going to be different. And in my mind, still, Bitcoin or crypto is a great liquidity hedge, not really an inflation hedge. It's a hedge for more quantitative easing, for more QE. And I definitely can foresee a moment. So the Fed, they're going to keep hiking rates until something breaks. Between the line, Paul practically said that they are going to do that. And usually it is not within the United States that something is going to break. It is offshore. So it's probably going to be Europe, or it's probably going to be Japan, or any other unforeseen thing. And if they're going to print, and in my opinion, it's not up to an if, it's up to a when. So when they are going to print, everything is going to skyrocket. And if I just look at crypto things, what makes me bullish is I look at a few things, and I look at addresses with more than 0.01 Bitcoin hitting all-time highs, other addresses with more than 1 Bitcoin hitting new all-time highs. So the plebs, they're stacking, they're buying, they're hodling. If I look at who's actually selling within the last 6 months or so, it is mainly people that are new in the ecosystem. It's mainly new addresses. It's mainly people that came in 2020, in 2021. Those people are selling. Hash rate is doing exceptional. We can see a small setback, not really that it's starting to drop, but like maybe a pause. And also that miner profitability is super low, that miners are selling probably the most as they have been selling since 2018. So there is miner capitulation ongoing. We see big players going insolvent. BlockFi is entering chapter 11. Which are all kind of signs to me that we're very close to bottom. And also, if you overlay past bottoms with the cycle that we are having right now, we're right about in the range where a bottom seems to be happening or on the table. And right now, a lot of people don't seem to see the light at the end of the tunnel. Maybe there is another company that is going insolvent, and maybe we're going to see another leg down. But I ask myself, what would be max pain? And you said a lot of capital is on the sidelines, which I strongly agree with. But what would be the max pain for capital on the sideline? It would be that the bottom is already in when we're going to move higher, because then they are not getting the prices they want to get, and they're practically missing out a bit. And the more capital is on the sideline, the harder we will pump when the bottom is finally in. So I don't know. I can't help it. I am a little bit bullish, and I don't want to be on the sidelines right now because I'm almost fully allocated. I have a little bit on the sideline. I have a few buy orders, but really not a lot. And of course, for me, it's a little bit different than for most people because I get my salary in Bitcoin. So I'm practically dollar cost averaging out, not in. It's something in between. I'm keeping my salary in Bitcoin as much as I can right now, and I'm not going to sell. I'm rather a buyer right now. Yeah.
I think the points you're making are fair. Really. I mean, look. I on Saturday I did this call in a very small group, and I was asked this question on how would I notice that it's spring. So I was talking seasons, right? And so obviously, I think everyone would agree that we're in a crypto winter right now. I think very few people would deny that, and obviously the question is, so when would we know that it's spring? And my answer to that was that what people what people want to know is when is the first day of spring. They don't want to know when it's spring. They want to know the first day of spring. And this is like very, very difficult to kind of know because if I don't know if you live in a place where there are seasons. In Singapore, we don't have any seasons, but back in Austria, obviously we had seasons, and it could have been in March that, I don't know, we had this, I don't know, 18, 20-degree day, and snow was melting. Everything was like, this is going to be like spring is here. And then, I don't know, it's mid-April, and then suddenly there was like this pushback from winter, and suddenly everything got snowed in again. And we had like a week of snow, and suddenly people realized, oh my goodness, that March day was not spring. And then maybe like later on it becomes spring. So the question that I just always kind of throw back here is, with spring, do you want to know like the assurance, the guarantee that it's spring, or do you want to have that very first day of spring? And so the reason why it is relevant is the following: if you are a investor that understands good decision making based on probabilities and thereby on bet size, right? I mean, at the end, bet size matters. That's a key thing, right? You can. I mean, of course, like, I don't know, playing the lottery is a losing bet, right? So that makes no sense. But let's say someone that just, I don't know, spends $1 or €1 a week and plays the lottery just because whatever, and that person has enough money, it doesn't really matter. But if a person, all that person saves up is like €1 a week, and it plays the lottery every single week, that person is never gonna generate much income. It's just against it, the odds are stacked against it. However, if you're having bets that you're very sure, very likely they're going to happen, it does make sense to take larger bet sizes. And when you're not sure, it makes more sense to try not to be wrong. So that means having exposure, but not overexposure. And so, for example, in 2020, I was fairly sure that crypto and anything risk on was going to do well. And so I took a very large bet of my entire portfolio. Um, if it were spring, so middle of spring right now, so we're not talking first day of spring, we're talking, let's say, May, I would be fairly sure or fairly certain that I could put a lot exposure into that bet. On the very first day of spring or in winter, or trying to kind of spot the shifting of winter into spring, I would take a very cautious approach. And the reason is because you don't know how long winter lasts. Sure, winter may last only until next quarter. It may last until 2024. It may last until 2030. Who knows, right? We don't know. Now, we all have an opinion, but at the end, we don't know. So my idea here, and that's how I approach this, is during times like right now, I definitely want to be in crypto, and I am in crypto. And I think not being in crypto right now is a massive risk. However, if you now start betting on that this is the end of winter and this is the beginning of spring, and now you are like heavily overexposed into crypto, and you're like, there's no downside from here. This is only upside. I don't know. I mean, I know a lot of scenarios how we're going to see another minus 80%. I'm not saying this is probable. I actually don't think it is probable. But it's something I want to put something in there, right? Once we go into the spring phase and once we're fairly certain that now everything is cleaned up, prices are going up, regulation is sorted, we see institutions coming in, that's, in my opinion, when you're not going to get the best prices anymore, but you get the best probabilities. And that's key to understand. So keep that in mind. Not being in crypto right now, in my opinion, is just as risky as being all in crypto right now. And you probably want to be somewhere between 1 and 99%. And where in this 1 to 99% really depends on like your ability to generate income, your stability of that kind of income, about how much breadth you have, what kind of risk tolerance and what kind of risk exposure you can have. And I think that's really key to understand. And it may be the right decision right now for someone to go 90% in crypto because these are like historically low prices, probably over a 10-year time horizon. And it may be that someone that has a lot of like commitments and a lot of responsibilities says, you know what, it's just the perfect time to keep my dollar cost averaging on right now. I'm not going to stop that. But I'm not going to go 90% in right now because who knows, maybe we're not going to see much higher prices for the next 5 years. And so that is just the kind of caution that I would kind of call for in the approach at the moment. That's all I would love to add there. Yeah.
I guess when it comes to like sometimes I compare companies to individuals because at the end of the day, both have a balance sheet, both have risk exposure, both have a treasury and need to navigate their way in a market. And right now, probably one of the best things to be prepared is to have a similar allocation than Cake in your personal portfolio. So Julian calls it breadth, or in company talk, it's called runway. For individuals, it's called rainy day money, personal finance. So one of the most important thing is have some runway. And if you're young, you probably are good with, I don't know, 180 days or a year of runway. If you're a little bit older, you want to have a little bit more of a runway. If you're a company, you probably also want to have a little bit more than an individual, because as an individual, you can always just, get another job or go back to work, or you have probably, if you're living in a Western country, you have social services that can help you out. But it comes down. So Cake, for example, we have 5 to 8 years runway, and Julian talked about probabilities. And the probabilities in crypto, at least, for the last 10 years, it's that every 4 years we're entering another bull cycle. This doesn't really have to be true, but from a probability standpoint, it is very, very likely that there is an end, that there is a light at the end of the tunnel, and we're going to enter a little bit of a bullish phase. And if this is the case, of course, you need to have enough capital to reach the point when the market is turning. And you also need to have some exposure, because you want to already hold or own the assets that are going to do well. And just from a probability standpoint, you're very unlikely to sell the top, and you're very unlikely to buy the bottom. So the question that, or the thing that Julian addressed earlier, is everybody wants to know the first day of spring. But if the first day of spring hits, you already want to be allocated. So you need to have the feeling of when is winter going to end. And you probably want to allocate during wintertime. You don't want to allocate during springtime. Of course, for some people, it makes sense to have confirmation first and buy later. I can completely understand that approach. But I guess just from a probability standpoint, it is easier to dollar cost average during wintertime, because when you're waiting with your whole capital on the sidelines for the first day of spring, you are very, very likely to buy a bull trap. A short squeeze, a short pump, you think, okay, bottom is confirmed, we're going up now, you allocate, and then the market dumps on you. So both from an emotional standpoint and from a probability standpoint, I personally, this is the recommendation I would give to everybody, is I can sleep like a baby, just because I don't overexpose myself. And with dollar cost averaging, I have a great entry, and I'm emotionally detached as soon as I get overexposed, and I have a lot of emotions. Like, we are really seeing that on social media right now. There's a lot of frustration and people calling out other people, like a lot of finger pointing and a lot of negativity. And my best guess is a large part of that negativity and frustration is because people are overexposed. Because when you're not overexposed, when you're within the boundaries that you're not getting emotional, there is no need for finger pointing. Then these are actually great opportunities to buy. Yeah.
Yeah, couldn't agree more. Yeah, I think these are good points. Why do you think the market is so sideways at the moment?
Good question. I guess there is not a lot of buying pressure. It is I guess a lot of people are playing the waiting game. So if I have my go-to guys when I want to hear a trader's perspective. For example, Capo, he's one of the biggest traders, and he had many good calls, and he's completely on the sidelines, I think, since 17, 18, 19,000, somewhere around that range. And he's really advocating for everybody to exit all markets, wait for the next leg down. He's calling for 12,000 Bitcoin, for sub 1,000 Ethereum, for a 50% dump in altcoins. And this is the main narrative that I see from crypto traders that are bearish right now. And so they're playing the waiting game. They have their capital on the sidelines. They're waiting for a dump. You have the plebs that are dollar cost averaging, but they're not moving the price. It's not that this is not enough capital. You have the institutions, and they're also playing the waiting game. They're looking, okay, are we going down? They have probably a few buy orders in place, but a lot of people, they wait for confirmation. And as soon as we get it, I think there will be a sharp move. It's not, but most bottoms actually in history are not violent capitulation bottoms, so not a V-form pattern that the market is fully capitulating and with a sharp candle to the downside and a bounce back up. Most bottoms actually happen in boredom. And I can foresee this happening as well right now. And you can see this on socials, on Telegram, on even I talked to our head of customer support this morning, and people, like, we have super low volumes. People are not creating customer support tickets or interacting with us. Like, we don't really see a lot of outflows, but it's just consistent sideways actions. Like, it's boring. Nothing happens, and this is devastating because crypto lives on volatility. It excels with price movements. If there is nothing happening, yeah. What do you think, Julian?
No, I mean, I completely agree. It's just waiting. The buying demand is just not there. People want to be a bit more on the cautious side. Um, yeah, so I think that's the key thing. Um, I wanted to also cover at the end some of the Cake updates that were launched over the last week because it's been quite a busy week for us. Are there other topics that we have on our list that we need to go through or questions? I've been monitoring questions both on YouTube and on the Twitter space. I didn't see any that makes a lot of sense, but yeah.
Um,
No.
One
Yeah.
user asked if I can share the name of the crypto trader that I just mentioned. I put the handle in YouTube. It's at
Crypto
crypto
couple
couple.
underscore.
Yeah. And one Jochen asks or makes a statement. He says salary increase negotiations because of inflation. So higher salaries means higher prices, means less profit margin, more layoffs means money printing. What do you think about that?
Didn't see that question. Yeah, I mean, sure. I
Yeah,
mean, that entire discussion on are we going to see money printing or not next year? Are we going to have QE, for example? Um, I mean, who knows? I do think we're going to see lower interest rates in a year than we're seeing right now. The question is just how quick are these interest rates going down? Like the rate of change really matters. I mean, that's the only reason if the Fed really kind of comes into play. I don't see that though. I think that's way too risky for the Fed. From everything I've heard from the Fed, they're gonna rather have a recession next year than lower interest rates or high inflation. So, and I do agree. I mean, it's easier to solve a recession than to deal with the inflation from today's kind of standpoint.
I actually let's do a 180. I want to throw a question to you over to you, Julian. And uh, Elon bought Twitter. He's pushing for free speech, and he gets a lot of pushback, not only from the traditional media, but right now he gets pushback from Apple. So Apple completely stopped advertising on Twitter. And as many of you know, they actually have a 30% tax on everything that is happening in the App Store. So you have like apps like Spotify or Netflix. I'm not even 100% sure on Spotify, but you have apps that are not listing themselves in the App Store because let's just say Netflix, they put their app up for 10 euros a month via the App Store. $3 and 33 cents actually go to Apple directly of all of their subscription revenue. So they have a 30% tax on everything. And Elon is pushing back hard on that. Yesterday he made a tweet and he said he's willing to go to war, and like he's pushing a few tweets out where he's exposing the crackdown on privacy and free speech that Apple is allegedly participating in. What are your thoughts on that whole thing?
It's interesting. I had a discussion with that today with Crypto at the office, actually, where we discussed exactly that point. And my point was, yeah, I mean, if he can break that part, I mean, if he can break that, he's going to break a big monopoly in Apple. I'm not sure if Apple's going to bulge on that, even on Twitter and even for Elon. I don't know. But I do see that Apple gets more and more pressure. They're going to have to somehow kind of find a middle ground there. I think their 30% kind of royalty is over. I think they're going to have to find a different middle ground. I think, if that royalty becomes 5% or something, I think way less companies would have an issue with that. Maybe even 10% they would be okay with, but 30% is just so insanely a lot. So I don't know, maybe they can work on a volume base where they're like, the more revenue you do or the more downloads you have, the lower that volume. Sure, again, that kind of incentivizes the large players. Maybe you can do a different kind of system. I don't know. I mean, it's interesting how Elon spun that, where he said, Apple, are you pro or against free speech? I mean, at the end, it has nothing to do with that, right? It's just a very good marketing spin, and Elon is just an absolute expert in that. What are your thoughts?
Yeah, I love the confrontation and the controversy, and also like he put it in the words, he said Apple practically has a 30% tax on the internet, which of course is an overstatement and not completely true, but it hits the nail.
Yeah.
And like he mentioned in an answer to somebody that if this becomes a problem, so if Twitter is going to be delisted on the Google Play Store and it's going to be delisted in the Apple App Store, that he's actually thinking about making a phone. And oh my god, I would love that. Like the guy that made the Cybertruck and Tesla, like he has a feel for design. He has great values when it comes to free speech. He has a great approach to marketing, as you said. And I can completely foresee a phone that would be absolutely amazing if it would be, I don't know, a Tesla phone or maybe a new company or a boring company phone, whatever. One of the Elon companies that makes a phone. Oh my God, it would be so exciting, and it would give a little bit more competition because we have these two big players, Apple and Google, basically. So more from a software perspective, it's actually only those two. Of course, you have big hardware manufacturer, but as Steve Jobs put it, you only can make great products if you tie in hardware and software together. And the company that does this the best is probably Apple, followed by Google. There's other companies that have tried, like Jeff Bezos with Amazon and the Fire Phone. I was following that launch as well, but they didn't succeed. So I would actually like if he could go into the mobile phone market and put some fire there. Competition is great for everybody because then suddenly Apple and Google need to rethink their approach and probably push out a better product as well. So I'm excited about him. He's like, I don't know, he just goes into an area and he puts everything on its head, which I think is great. Yeah.
I would probably, if Elon goes and builds his own phone, I would probably sell my Tesla shares, and I've been holding them forever. The reason is just that I would also sell my Tesla shares if Elon stepped down as the CEO, and so to me yeah, I think already with Twitter, SpaceX, and then Tesla, he's stretching himself so super thin, and obviously for a certain period of time as a part owner, and I see myself as a part owner, right? I don't bet on a price; I bet on value. As a part owner, at some point, I would just think, like, dude, I need commitment. You're in such a difficult business already in building like in competing with so many other car companies, and you need to come out of this. And now you're competing with like a behemoth. Apple is like, I don't know. I would probably not want to see Elon compete with Apple, despite him being the best entrepreneur that I honestly think that the world has ever seen. I don't even think Steve Jobs had this talent as an entrepreneur. Um, but Apple is, and again, I'm also an Apple shareholder, so it's a bit of a difficult part there. But Apple to me is such a behemoth. It's such a insanely powerful ecosystem. It's so sticky. And while I think a lot of people would say, "Oh, I would love to," to me, that reminds me a bit of people saying, "Oh, sure, I would love to see a phone," but it's so difficult to actually design a phone, and it's so difficult to actually make this ecosystem sticky, because you need to make it interoperable, right? It already drives me insane on certain things that the Tesla is actually the car is not interoperable as well with the phone, which sometimes drives me insane. I like a Mercedes is way more interoperable with an iPhone than a Tesla, and while I love how interoperable one Tesla is with another, that's incredible. It just drives me insane how my phone does not like properly speak to that car, and so yeah, I would be probably, while I would find it super exciting and I would cheer Elon on, I would probably sell my Tesla shares in this moment, in that moment, just because I would struggle to see how he's gonna compete against like traditional media, how he's competing against like all the other car companies, and then how he's competing against the most powerful machine this world has seen so far, with Apple. And yeah, I think he should. I think him fighting 2 battles, that's fine. Fighting 3 battles, I don't know. That's not what I would want to see as a
Like
shareholder.
honestly, so just to put it in comparison, and I know for the fact that you tweeted about this a few months back, like it's mind-boggling to me how you, for example, you're the CEO of a sizable company, how you structure your day and you find the time to get involved in all these different kinds of apartments, being very hands-on, knowing everywhere what's going on, and still I know you share bits of how you structure your days, which they are insane. Like every minute is planned through and through and through, from sporting to Wi-Fi time, how you call it, and the kids and the company. And for me, I have great admiration for people that put it all together and are able to deliver. I cannot imagine by the love of my life how Elon does that. He has like 5 companies that are gigantic, and he has 7 kids, and he needs to be all over the world, and then he also has the time for public speaking and attending events and celebrating Halloween and I don't know what, and doing networking, and while he's doing that, he's sleeping in the factory, and he's spending with a whole night with Twitter and coding and doing marathons and hackathons, and it's mind-boggling how he does that, because my job is pretty straightforward. I just spend a lot of time on social medias, and I use a few tools, and I struggle a lot with my time management. But it's just one company and a very straightforward job. So it's crazy how he manages all of these things, and very successfully until now. Of
Again,
course,
I cannot judge that, right? And it's really purely on what I see, what I assume, right? Purely, and what I kind of try to scale from the work at Cake and try to scale that to whatever they do. I don't think at SpaceX at this stage he's needed as much anymore in a sense on day-to-day operations. I think with Gwen Shotwell, I think he has a fantastic COO who has been running that business in an extremely efficient manner. So I think that's key. And I think he just needs to go in there for the big picture, pushing certain things and so on. I think on Tesla, as far as I can judge that, I mean, I see this with like obviously the Berlin factory, the Shanghai factory, from everything I see there and experience myself, I think he has overcome a lot of that like production hell or whatever he called it. So I think I think that's been I think there it goes way more into the operations right now. I don't know who is their COO at Tesla. I don't know if he found someone, but I think honestly that is the key thing there. So I actually do think at the moment he spends a lot of time on Twitter and really needs to clear that and kind of solve that. And I think what he needs to do at Twitter, and it always comes down to the same thing, it's he needs to put the right people in place. He needs to kick the right people out, and he needs to put the right people in place. And I think Elon has been absolutely outstanding in doing that. I think the expectations he has for people is extremely high. I think he's doing a really, really good job there from everything that I've seen. And then I think all his other engagements, be it Neuralink or be it the Boring Company, I mean, that's purely me kind of rehearsing what he has been saying in interviews. He just says like that cost him, I don't know, like almost no time. Like I think Neuralink, whenever he does these events, he's kind of I don't know, he does like these 2 hour kind of briefing calls with the CEO there a week, and he kind of stays up to date there. So yeah, I just think that has been his main kind of skill set. I would think so. I think the question now is how long. Like my question, right, as a part owner of Tesla is how long is his energy, focus, commitment, headspace tied to Twitter right now? How long is this going to happen? Because at some point, right, the speed he has and that kind of push he has, setting these unrealistic high goals, pushing everyone in the company, forcing everyone to step it up, is going to be required again at Tesla. It will be, and so from everything that I see right now, I would assume a lot of it is at the moment spent on Twitter, and he needs to get people in place. And I think, as far as I know, they're looking for a CEO. I think they're looking for the people there. So once he has that in play, then yeah, he needs to kind of roll there. So I think that's just the key thing. But if he takes up Apple, he's gonna be stuck at Twitter for way longer, and I don't know if that's a battle that I would want to see as a shareholder of Tesla. I would be a customer. I would buy the car. I would cheer him on. I wish him all the best, and I would hope that he would like have a good fight. But it's not something that I would want to see as a shareholder of Tesla.
Yeah, 100%. Like Tobias mentioned this as well. Tobias says he has to manage people, not companies or operations. And it's funny because so we have 17 principles at Cake, and most of them are based out of the book Ray Dalio Principles, which is an absolutely amazing book. I try to read it once a year to remind myself, because Ray Dalio has great values when it comes to creating a company. And what he says about what a company actually is he says a company is practically just its people and their culture. And so, in my opinion, what Elon does exceptionally is he hires great people and he forces or he lifts great culture. Like he has such a high expectation. Like they produced a T-shirt. Stay at work. He like that. Initially, he found some Twitter swag in a French office, and the wording on that swag was "Stay woke," and he
I
changed the
know.
wording to "Stay at work." And you know, it takes a great leader to find people that are willing to work 60, 70 hours a week, to dedicate and to live to feel a mission, and to really step up their game. And he does that exceptional. And like he's the best evidence of that a small amount of people can outperform big teams by far. So if you go to, for example, the Tesla autopilot engineering team is made up of 150 people. So it's a very small team, and they're outperforming teams that are 20 times their size. So there are teams like 3,000 people working on competing products, which are not able to deliver as fast and as good as this small team. And so what he has like a talent for is he finds great people and with great culture. Like for me, it's mind-boggling. He fired 5,000 people from Twitter, and he the company, I cannot think of the word, compressed. The company was compressed to its essence, and Twitter is still it's working the same. He says it's working better than before, with like 20% of the initial people there. So yeah, this is mind-boggling to me. And like I really appreciated one answer to that tweet. Elon, please do government next, which I find kind of funny.
The issue about government is that obviously the voting is a popular vote, not a meritocratic vote. So yeah, it's yeah, and the best ideas are not always shared by the majority of people. The best ideas generally are shared by very few people. That's how it is. Yeah. Love the topics there, though. That's good. Couple of points. Check out our new kind of design on the website. We had a total redesign. Looks great. Love it. Very professional. Very slick. So have a look there. cakedefi.com. Check out our World Cup promo. worldcup.com/World Cup. Yeah, quite cool. And yeah, you can win a Bitcoin. So have a look there. Today, I think the USDC earn and the DUSD earn went live or is gone live. I think all the marketing goes out tomorrow and the next day. So you'll hear it here first. Check it out. Take a look. And we had the launch of our episode 2 of the vlog. So take a look there as well on our YouTube channel right here, or on Twitter, obviously, if you're heading over. Are there any topics that you feel I missed to mention? Ethereum on staking is working. Yeah, right. I saw that as well. So that's quite cool. Anything you feel, Fabio, I missed or we need to add for the people listening or watching?
Maybe as a slight side note, since about April this year, we are working on this what we call the reward dashboard.
Yeah.
I tested it this morning, and for timeframes that we are providing right now, it's working perfectly. We are still adding the 1 year and the all time. Please bear with us. We are in the finishing stages of that, and we're going to push that out as soon as we feel we're comfortable to do so. But head over to our app or to the website, and you can see it's being live and functioning again. And bear with us. We're we're trying. A while back, we announced that Cake is going. We call it multi-chain. So we're gonna integrate other ecosystems onto Cake. And I think, I hope I'm not saying anything I shouldn't, but I think we are planning to add at least one additional ecosystem this year, and we are looking to a handful of other ecosystems and chains for 2023. So yeah, that process is also going. But we have now we have, I think, 3 or 4 weeks of high intensity ahead of us. I think around until mid-December-ish or so. And then we are not planning any products, I think, or major launches for a few weeks. So we're going to finish the year strong. Yeah.
Oh, for
So
sure.
follow us on all the different social channels to stay up to date. We're going to push out a lot of that. One of the things is what Julian just said, is a stablecoin earn. So you will be able to earn a very competitive yield, I think 9 to 10% on your stable coins, starting from today.
Yep. And one has to say that this is completely transparent. You can track and trace everything. So there's no black boxing. All of this is based on DeFi. So you can verify all of this yourself. That is the principle of CDeFi. With that, everyone, I very much appreciate your time watching, listening, joining. Congrats on taking control of your financial destiny here on the platform, getting cash flow in your crypto. We are doing this on a weekly basis. So follow, subscribe, like, do all the awesome things so you get your info here. And with that, we are out. Fabio, thank you so much. See you next week, everyone. Appreciate it. And cheers. Thank you.